watching Properly Sold Podcast and I'm Vina Ip. With mismatch of supply and demand, many new launch projects are priced to sell. Developers are giving away more discounts. The question is, should we buy now when prices are lower? Let's discuss 3 things in this episode. What are the latest prices and unsold stocks? What things get cheaper even when there is inflation? How long will this run of property great Singapore sale last? According to ULA's latest data, the total number of unsold units excluding ECs has increased to 20,800 in June, an increase of 22% in just 1 month compared with May's unsold units. The number of launched but unsold units remains over 4,000. Even readers admit that there is mismatch between supply and demand. The property market is now facing high supply and subdued demand. But it's that there is limited price downside. Do you notice that new launch projects are drawing traffic, but not closing deals? These days, the media only report how many show up at the preview and launch weekend. Unless sales is exceptionally well, they no longer report how many units sold at that first weekend. But numbers don't lie. We can always refer to ULA's latest data on private residential units sold as of last month. You can see from the table that over 70% of the new projects are under 30% sold. Is there really limited price downside like what we just said? Property Guru recently posted an article titled 8 Most Affordable New Condos for HDB Upgraders, an editorial to help developers promote their new launch projects. It shortlists 8 projects priced around 1,000 feet per square foot. The pool of buyers is getting more limited and price conscious. If they are not reasonably priced, customers can buy from another new launch nearby. What's the point of being firm on prices when there is no business? It is a beautiful misunderstanding that developers will raise prices at subsequent phases. This can only happen when times are good, and fancy thinking that prices will continue to go up for years to come. People need to wake up to the fact that property is not a good hedge against inflation, as seen in many developed countries such as Japan and the UK. The older generation may remind you the days when a bowl of noodles cost 20 cents and you can buy a 4-room HDB flat for $20,000 in the 1970s. See how prices have gone up 20 times after 40 years. Those are the good old days when Singapore evolved from an emerging nation to a developed country, with tremendous growth in economy and GDP. But people tend to forget that there are many things with prices falling over the years despite inflation. I come across a list that showed the cost of living in Hong Kong in 1976. While everyday expenses were unbelievably low, a 2-way ticket from Hong Kong to Kuala Lumpur cost a whopping 1,981 Hong Kong dollars, or $8,800 when adjusted for inflation. Today, a return ticket on the same route starts from below $800. Wow, air ticket prices have dropped over 10 times in 40 years. Remember the first generation mobile phone from Motorola? It was a status symbol to be seen carrying one in the mid-1990s, and it cost over $3,000. Today, you could simply renew a 2-year contract with a telco and pay a few $100s for the latest handphone model. The same applies for all IT gadgets and home appliances. Every new model comes with better design, more features, but lower prices. Of course, we can't compare properties with consumer products, but the keywords I want to point out here are mass production, supply and demand, and competition. These few things explain why prices are stagnant or fall over the years. Remember I bought a condo unit in 2003 at the same price when it was launched 20 years ago in 1983? For those 20 years, even if you only look at inflation, the price should have gone up at least 35%. And remember those who bought their homes in the mid-1990s took almost 20 years to break even. Who said property is a good hedge against inflation? Recently, we heard more bad news on economic slowdown and company layoff. It's the bad sign where the return of long-term bonds are lower than short-term debts. Investors are holding back to invest in the long term and choose to gamble in the stock market. Amid uncertainties, the price of gold shoots up. We know it's time we play defensive again. Back to our question. When property prices have come down in a buyer's market, should we enter the market now? A property investor has an advice that makes very good sense. He said, "It is much safer to enter the market when prices begin to pick up than when prices begin to fall, because you don't know how far and how long they will drop." Although we are seeing more new projects being priced to sell by developers, I don't think the property grid Singapore sale has even started yet. When a project is newly launched, we see buyers go in to buy at full price. When developers start giving discounts, some are motivated to buy. But when prices keep coming down, buyers decide to hold back because they expect prices to drop further. At this point, there is no more buying interest because those who wanted to buy would have already bought. That leaves only the value seekers who are waiting for the sale that is worth waiting for. That's when they take their time to go in and pick up a few gems in the real property Great Singapore sale. Let me know what you think. Be sure to like this video and subscribe to my YouTube channel. Until next time.